Hey, FreightWaves fans and friends, ladies and gentlemen, and neighbors. Thanks for tuning in again here on Thursday. We're bringing it to you, well, as you know by now, probably, each and every business day. But if it's your first time, welcome aboard. And we have not one, not two, but three market experts for you today. Nick Austin telling us what's going on with the disruptions in the weather. And boy, is there a lot of disruption. So he's got some news for us. And Jesse Cohen, market expert, telling us about air cargo, what's happening, what to expect here in 2019. A little bit different than 2018. Shocker, I know. And finally, the Sultan of Sonar, Zach Strickland, makes a return today. He was with us on Monday, back with us on Thursday to talk about, well, a myriad of things, and also to tell us about why the trucking freight futures why is it time right now for the freight futures to take over everything and be an awesome marketplace. So that's what's happening right now. And also special thanks to Michael Crosby, the Wizard of Croz, for running the train for us with all of these slides. So, okay, Nick Austin, take it away, sir. What is happening? Lots of beautiful colors today.
A lot of colors on the map. The Midwest is just still getting hammered with snow and freezing rain. The icy roads is really what's worst for the drivers out there. So from parts of Illinois and Iowa around what's known as the Quad Cities up to Milwaukee, northern parts of lower Michigan, right up here around Traverse City and up in these areas, you see a lot of red that's been on the radar, and that indicates freezing rain. So there have been reports of some ice accumulation and some icy roads. Possibly not on the interstates necessarily, except maybe in spots. But as far as secondary roads, untreated roads, they're going to be the worst. And then
I mean, look, just all of these key market areas.
Lots of heavy snow from right along the I-29 corridor. That's in the eastern part of the Dakotas, over into Minnesota, like Fargo and Grand Forks, down to around Sioux Falls and those areas. Lots of snow.
Mount Rushmore.
UP of Michigan. No, not necessarily Mount Rushmore.
Really? It's not over there?
No, that's further out west.
Oh.
No worries for them today.
Okay.
Yeah.
Well, I'm sorry, I didn't mean to
That's
disrupt
okay. But anyway, those areas will see a lot of snow and a lot of wind, blizzard conditions.
Okay.
That's not going to be good for drivers out there. Now, a lot of that's going to fade out tonight, but there will be some areas tonight in the Northeast that'll see some freezing rain, but not in a lot of the major metropolitan areas, not necessarily along the I-95 corridor. It'll be in interior sections of the Northeast. And a lot of heavy rain with some possible flooding in parts of the Southeast today. Maybe some severe storms with damaging winds, maybe some isolated tornadoes too, from Little Rock all the way up to around Nashville and Cincinnati. So it's not going to happen everywhere across that span, but there will be spots of severe weather, possible flooding, and maybe some isolated tornadoes and wind damage.
Just a sheer wall of precipitation.
I mean, the rest of the country is quiet today, though.
Who will stop the rain in the Southeast?
Yep. Big stuff, and a lot of record high temperatures across parts of the Southeast today, including right here in Chattanooga at FreightWaves headquarters. We'll probably hit record highs in the upper 70s today.
And so it's going to be warm. Is that the new norm?
No, that's not going to last long. It's going to get colder again starting tomorrow.
Oh, thank goodness. Yeah. I guess.
It's still February, so our weather here can get up and down across parts of the South. But the big concern is going to be across the Midwest, interior portions of the Northeast. We have a much bigger weather story happening for the weekend, which we'll hit upon tomorrow.
Oh, nice tease.
So make sure to tune in tomorrow as well for that. That's going to be happening up in the Northwest.
Okay.
All right, so be careful out there, everyone.
Be careful. Lots of disruptive weather. It's winter after all. Thanks for bringing it to us, Nick Austin. Even if it's kind of bad news in some ways, but the news must, the freight show must go on, and so must updates on the weather. Now, Jesse Cohen, air cargo. What is happening, sir?
So thanks very much, Chance.
Yeah.
So this past week, we got reporting from the International Air Transport Association to basically close out the year 2018. And basically the news for cargo was growth of 3.5% overall in terms of freight ton kilometers. But the last 4 months of the year were very concerning. Basically a flattening out of the trend.
Is that what we're seeing here?
So we're not looking at that right here, but essentially the ISM metrics from the Institute of Supply Management really provide sort of the best forward-looking indications for what will be happening in the air cargo sphere this coming year.
And we just got this news.
So we just got the news.
Okay.
We had another source of industry information that essentially validated the same thing. A little bit of growth last year, all pretty much front-end loaded. The last half of the year was a bit slow.
And what do you have? So you have the Institute of Supply Management metrics with the PMI pulled up in white. What do you have across compared with?
So that's comparing the overall index with the manufactured exports index. And really the manufactured exports is probably the best indicator for air cargo.
I got you.
Now typically with the PMI, 50 is kind of your balance point, and anything above 50 is a positive growth. Anything below 50 indicates reduction. So here we're still above 50. The concern is really the fact that the export line, the green line, is moving down faster, to that 50 basis point, and if once it crosses that, you're really into a shrinkage mode.
And that is so we saw like a slight bump at the end of December, and now we've been trending down for the month of January, right?
So we've really been trending down. Maybe a slight bump, but really, we're kind of measuring this, going back to the first quarter, the end of the first quarter of last year, and it's been on a downward trend, while the overall index has been up and down. Had a big down in December, but popped back up nicely in January. But for air cargo, the green line tends to correlate the best with what happens in the ton-kilometer range. So that's really where we're focused. IATA came out with a 3.7% growth forecast that I spoke to last time.
Yeah.
With 3.5% being the number we actually achieved in 2018, there's really a question whether we're going to be able to hit that 3.7 going forward in 2019.
What do you make of this precipitous slide that happened even during such a year of tight capacity and high volumes?
Well, I think we're basically looking at a lot of uncertainty out there in the marketplace. There's a lot of international uncertainty.
Now there is,
globally,
right?
Yeah.
But like, was there uncertainty with air cargo in most of 2018?
So a lot of air cargo, as we've discussed, is driven by the Asia-U.S. trade, and certainly China, the U.S.-China discussions, the trade talks.
Okay.
Whatever the outcome is of that, we're hoping for a positive outcome, but that's a key driver of the business. Certainly other complexities, just the overall U.S. economic outlook, Brexit, all of these things just add a level of uncertainty and reduce that index of doing business internationally.
Okay. And what else do you have pulled up here for us?
So we're talking about a couple of things that are going on that are kind of hot and topical in the business. We're really just finishing up the Valentine's Day shipping push from an air cargo standpoint. Valentine's Day is February 14th. It is a major holiday involving a lot of flower shipping, and two of the major flower growing markets are Colombia and Ecuador. And what we have here is data over the past really 3.5 years that comes from the Department of Transportation, and it's showing the volumes of air cargo coming into Miami, and this is, for the most part, it's flower traffic. And you can see the clear spike, pretty consistent seasonal. January, and the January spike feeds really the February 14th, the Valentine's Day, and then the April-May is really the Mother's Day spike.
Why is the information on 2018? Why did that stop in July?
So the latest data that's available tends to lag about 7 months.
Wow!
But it's really excellent data, and for multi-year trending, and you can really see the value of it here. Just there's such a consistent pattern. What we're trying to do here is tie, developments in the air cargo business to developments in the trucking business.
Yeah.
And moving on to the next slide, here we have this cargo coming into Miami. Now, some of it is being exported to Europe and other parts of the world, but a lot of it's coming into the U.S. A lot of it is going to require trucking support from Miami to get it to its final destination, be that Atlanta, Chicago, New York, Dallas, West Coast.
This is interesting. You've got the V-Tri up against the R-Tri.
Right. So what we have here, of course, flowers need refrigerated trailers for keeping the product fresh. And what we've got here, going back, really this is designed to show sort of the Mother's Day spike, and then the continuing high demand for refrigerated trailers and the fact that we have high rejections on that particular unit versus dry vans, which is the white line. But that Mother's Day push that comes in with flowers from South America, helps to push this line toward the end of April.
And that's why we see refrigerated going up so much.
That's why we're seeing refrigerated. Of course, you also have local Florida fruits and vegetables that are competing for space, and I think that's driving more of this in the middle.
Okay.
But this is really something that's there every year. It's something to keep in mind. It's an opportunity. I think last year we wrote here at FreightWaves about reefer rates going up 52% for Mother's Day in May. So that's an opportunity to keep in mind as we get into April. If your truck's in Florida, there's an opportunity to get some pretty good yields if you can supply reefer.
Are these other spikes? Are these seasonality type of spikes too, since they seem to be close to Thanksgiving and Christmas, or?
Yeah, so I would imagine that there's some flower spiking, and there's other perishable traffic that is certainly supplied for Christmas, and that would explain the smaller spikes toward the end of the year.
Yeah. All right. And thanks for that. And I think we have even one more piece of data here on air cargo.
Yeah, so last time, here we talked about the China-U.S. trade and how large that was and the rate trends going into the fourth quarter and the peak. And here we have the Prevost Baltic Index, which is ocean container rates that are reflective of China and Hong Kong to the West Coast.
Yes.
And that's the white line.
Okay.
And the orange line are the air rates per kilo from Hong Kong to North America, and it's very interesting to watch the patterning where the ocean rates this past year went up about a month before the air rates did.
And we do see a correlation while they're separate, but now what's up with
so we're
the disparity there?
Earlier this week celebrated Chinese New Year, and as we discussed in our last session, we had the ocean container rates fell off slightly, but then stayed high in anticipation of Chinese New Year and likely anticipation of the potential for tariffs after the U.S.-China talks finish up. But the air rates typically fall very quickly after Christmas, but they spike up very briefly just before Chinese New Year, that last weekend before Chinese New Year, and then they fall off again.
Interesting correlation. Thank you, Jesse. Is that it? Were you going to say something else?
So really just taking February a little bit forward, this is a typically slower month for air cargo. Typically your next peak industry-wide is the end of March. So there are opportunities in a lot of markets, not every market, but there may be opportunities for good spot pricing, good short-term pricing that you can benefit from if you're shipping by air, particularly if the product is larger shipments and denser shipments. Typically, this is a good opportunity to negotiate some favorable pricing. Going forward, this weekend I'll be attending the Air Cargo 2019 conference in Las Vegas, which is hosted by the Air Forwarders Association, the Air and Expedited Motor Carriers Association, and the Airport Council International for North America, and look forward to bringing back more news from that event.
Awesome. Thank you so much. Wow. So air cargo is, there's some opportunities to take advantage of. We're going to keep bringing it to you, what's happening right now in it. A lot of, standard, seasonality trends that we can see in some of that data. So thank you so much, Jesse Cohen. And now, last but certainly not least, the Sultan of Sonar, Zach Strickland, here to talk to us about, what are you here to talk to us about? You've got the DAT van, so we're looking at, from LA to Dallas, what a name.
We got the DAT Freight Rate Index. I think most people are familiar with DAT and their rates. Paired with the Outbound Tender Rejection Index for the same lane, Los Angeles to Dallas. And you're probably wondering why.
A little bit. Is this, by the way, just the line haul rate?
No, this is just the line haul rate. This is a relative chart showing you basically the rate of change between each index. So this is the spot rate right here, just the line haul rate moving up and down. You see all these big spikes right here.
Yeah.
And then right down here is the Outbound Tender Rejection Index for Los Angeles to Dallas. I'll get to that in a second. Why now for freight futures?
Yeah.
Well, one of the big reasons is the fact, and I think the Wizard of Craws actually talked about this on Tuesday, this right here.
It's very educational.
Super volatile. Look at these bumps and spikes and everything, but you really want to look at kind of these longer running trends and patterns as the market becomes, especially like in this section right here, this is a weird movement within spot market. And these represent 10 to 15% changes on a daily basis anymore because people simply don't know what's happening with capacity in the market, which is what drives spot market pricing. We heard about several companies last year in 2018 that cited transportation costs being a huge problem and not hitting their target EPS goals. General Mills was one of them.
Right.
They increased the price of Cheerios by a few cents.
It's devastating.
Yeah, just to cover some of these costs, and but it was too late. By the time they did that, it was too late. They still had to report these bad earnings calls, et cetera, et cetera. So that's the first reason why now is because all this volatility that's in this line right here. The second reason is the difference between these two things. This is starting to line up a little bit more. This right here is measuring, the outbound tender rejection index is measuring actual activity in the trucking market. And the reason that we can do this now is due to the overabundance of software and technology.
Yes.
That has flooded the transportation sector over the past year and a half.
The ELD mandate was sort of our industry's OPEC moment, right?
ELDs, but
and now information and technology is not as siloed. It's where it's aggregated, yep. and so this is where. Is this what you're getting at?
Yeah. No, exactly. So I mean, the technology and these little guys right here, everybody's got one. Not everybody always had a smartphone back in the day. So now drivers are walking around with them. They got them. We can track just about any movement possible on the planet. So transportation is becoming more and more transparent. This whole software package right here, Sonar, was built based on a lot of this technological advancement coming over the last several years. And we can see here that this market actually moved different. Like everybody kind of accept that, these spot rates are kind of telling us, oh, this is what the market's doing. Well, look, right here, actually, those rates could have come down, but everybody just kind of accepts the seasonal pattern that always happens.
That's how we read that. Okay.
Yeah, and if you think about it, it doesn't make sense for everything just to always do this. Nice little long swooping trends. It actually makes a lot more sense, especially to those in the industry who operate trucks and vehicles. Something like this happens. I remember working in LTL, we would have an awesome March followed by a soft April. And we'd never know, well, okay, why is that happening? We didn't know, we didn't understand it. But you can see that actually happened here. We had a strong March, softened April, and things kind of picked back up again in May, but then they kind of took a jagged line on up to the top in the peak.
Yeah.
So that's kind of the basic. But this is the hours of service chart.
Right.
This is kind of, this is the HOS 11. So what this is measuring is how many hours a driver is driving on average on any given day.
Of the 11 hours
hour
that
clock
they are allowed, how many are they actually driving productively? It's kind of a depressing number if you're out from an outsider and you're like, well, I thought you could drive 11 hours, maybe take a couple of, quick break stops. Maybe it's like, maybe you get like 9.5, maybe 10, like me, if I'm cracking the whip and my family's in the car, it's like for every 10 hours we're driving, 9:45. Like, it's like, use your water bottles. But unfortunately, there are a lot of other mitigating factors, right?
Yeah, no,
yeah.
There's tons. There's a lot of stuff that happens. Detention's a huge factor and whatnot. But the point of this chart isn't necessarily to show you the wild swinging activity of a driver's daily life. It's basically there to tell you that we can actually see what a driver's doing all day long. We can see all this technology is kind of blown in. The transportation market has been very, very lagging in terms of transportation implementation.
Yep.
This ELD, like it or love it, hate it, whatever you think, it has actually pushed the industry a little. It's given it a nudge forward.
Big time, right?
There's obviously problems with that in certain levels, but for what it's worth, it is definitely pushed the
trucking. The transportation and trucking industry is bigger than the oil industry. Shocking enough, it's bigger than the commodity industry. In fact, I think it's bigger than, or it's as big as the two combined. It's a gigantic industry, and it's globally, it's multi-trillions. In the U.S., it's 750 billion. So it's a huge market, and now it's finally time with like the technology, the ubiquity of all of our technology, that we're aggregating it, we're putting it together in ways that if you can interpret it, if you're on top of it, you can hedge and do these things that Michael Crosby was teaching us about on Tuesday. Right, and there's volatility, and now we can interpret it and see it in advance.
Yeah, so the companies like your General Millses don't have to have nervous, calls, but also carriers. Yeah, carriers can also kind of hedge their exposure to some of these downturning markets.
Yeah. Okay. Wow. So you heard it right here, right now, first on FreightWaves Now. Thank you to all of our market experts on just bringing it and helping to educate. Well, you. So thanks for listening. Stay tuned every day because Friday, not only is it about what's happening right now, but it's going off into like what's the weekend outlook and how to anticipate and plan for the very next week coming in. So we will see you tomorrow, each and every business day on FreightWaves Now. Check us out on FreightWaves.com and Twitter, and don't worry, be happy.